Hello and welcome. Thank you for finding my channel and taking the time to learn a little bit about the different types of mortgage programs that are out there. Most people don't know a lot of information, and so it's really good to have a specialist or advisor that can give you some information. So, today I want to talk about conventional loans. Conventional loans are mortgage loans that are offered by non government sponsored lenders, meaning it's not Freddie Mac or Fannie Mae. The type of loans include fixed rate loans, adjustable rate loans, hybrid loans, which are a combination of an ARM and a fixed loan, which I'll explain in a moment, balloon mortgages and pledge asset loans, jumbo construction loans, and reverse mortgages. A lot of people are surprised to learn that something like reverse mortgages are considered conventional loan types. So, with the combination hybrid loan that I mentioned a moment ago, that is basically a type of loan where the beginning part of it is an adjustable rate loan, and then it turns into or amortizes into a fixed loan amount or fixed loan rate rather after a certain period of time. So let's say you have a 7-1 arm. Most people may not understand what that means. So for the first 7 years, it's an adjustable rate on your mortgage, and that rate can increase every year for a 7-year period before it becomes a fixed note rate for the majority for the rest of the term of the loan. Let me see, what else can I tell you? There's also, as I mentioned, jumbo loans. Basically, are a type of loan where it goes above the how would I explain it? It goes above the average amount for a home, meaning the guideline or the baseline rather value of a home. Let's say if we're talking $800,000, that would be a jumbo loan, for example. Multi-million dollar loans, those would be jumbo loans. Um, and those have, like with anything, another popular question I get asked is, what are your rates? So rates can't directly be quoted by any lender because they need to know your particular scenario. So, for example, they would need to know like your FICO score, um, how much your down payment would be, your assets, such as the money you have in the bank. If you have any other kind of assets like other properties. So there's a lot of factors that go into determining what rate you would actually qualify for. So I get a lot of, oh, well, my friend got this great deal with this lender for this amount. Well, do you know the details of your friend's um, program offer? Like the offer that they receive is, of course, going to be based on their FICO score. Not everyone's going to sit around telling you their FICO score, telling you how much money they have in the bank. They have other investments, what those investments are worth. So there's a lot of factors that go into determining the rate that you qualify for. So that's why you'll find on average that lenders will be hesitant to tell you exactly, oh, well, you qualify for this rate or you qualify for that rate. No one can tell you that without knowing your particular scenario. So it's best to um, inform your lender or your broker that you're working with to get the loan through a lender, the details of what it is that you're looking for and what you're working with. So then it makes it more realistic for all parties involved to know exactly what can be done for you. Another type of loan category I want to talk about is, hold on, I have my notes here. Government loans. So, government loans are an attractive option, especially for first time home buyers, because they're generally easier to qualify for than conventional loans and lower down payment requirements, and they cannot exceed statutory loan limits. For example, you won't have a loan, a government loan would be like an FHA loan, and the down payment amount would be a lot less, so 3 to 5% down, as opposed to having to go as high as 20% down potentially for a conventional loan. So the down payment's lower. The rates typically can be lower as well. Again, that depends on some of the factors I spoke about earlier. And for first time home buyers who may not have, well, of course, you're a first time home buyer, you're not going to have any equity, you're not going to have assets of another property in order to pull from. So that's why having an FHA loan, there's a lot of benefits to that, especially for first time home buyers. So there's not a lot of skin in the game, as they would say, meaning you don't have to come up with a lot of money up front. You can, of course, when you do your financing, you'll speak to your particular lender um, and find out what the terms are for the different types of FHA loans that they offer. The third type of loan is jumbos. Jumbo loans are offered by non-government sponsored lenders as well, meaning it's not Fannie Mae or Freddie Mac, and those are the government entities that do the secondary market loans. So sometimes when you get a loan with a lender and they sell the loan, they can sell it to Freddie or Fannie. But with jumbo loans, as I spoke about earlier or mentioned earlier, they exceed the maximum loan amounts established by Fannie Mae and Freddie Mac conventional loan limits. Rates on jumbo loans are typically higher than conforming loans, which are conventional loans. For borrowers looking to secure their pre-existing dream home or who are ready to build luxury homes or luxury properties from the ground up, then a jumbo loan is generally the favorable option. They're typically used, of course, to buy more expensive homes, um, high-end custom construction homes, construction loans. Um, the limits vary by state and county. So for California, I believe we are at about 648 and some change, so 648,000 or so. Um, Higher than that is considered a jumbo loan. So hopefully, I was able to give some basic information on the different types of mortgage loan programs that are out there. And if you have any questions or if you have any comments, leave them in the comments below. And I thank you for your time. And I hope to have more of these lives and my YouTube shorts again later. So also check out my page, subscribe, tell a friend, trying to get the word out there. This is my first live, so I hope it went well and I didn't stumble and bubble too much and was able to explain the basics of some mortgage types. All right, take care.